Hey guys, welcome back to our SOC podcast. I'm Zoo, your host. This is our first podcast of 2025. I'm super stoked to have Samir here today. I'll let him introduce himself.
Yeah, hey, I'm Samir. As you said, I started my career in investment banking. I had this opportunity to join startups, and I was at Sift and at Chime, um, and at Unit. And where I am today is that I'm at Hudson River Trading, and I'm a strategic finance lead, focusing the business on helping to drive kind of high ROI initiatives. Is it worth
Awesome.
talking about Cash App?
Yeah, no, we can talk about Cash App in a bit.
Cool.
As everyone watching this, we know we talk about StratFin all the time. Samir has had an immense amount of experience, one starting from banking and then moving into StratFin. He had a big stint in Fintech. He's continuing to be in Fintech. So we're going to go and ask him some questions around that. But I do want to talk for about 30 seconds or 60 seconds. I know Samir from our chat right before, he did say he wanted to start in med school. So Samir, what made you move from med school and try to go into finance and then fintech and then now strategic finance?
Yeah, it's a really good question. Yeah, I come from a family of scientists. My mom's a doctor. My dad is is studied biology and is kind of biotech consultant. And so I was sort of dead set on medicine myself. But my mom, having gone through the rigors of medical school, she wasn't so sure. She was like, "Do you really want to be a doctor?" I said, yeah, of course, I really want to be a doctor. And she said, maybe choose a liberal arts school just in case. And so I maybe I took some of mom's advice, or maybe I just loved the basketball team. We'll never know. But I chose Duke, and I joined Duke as an undergrad, and I was ready to take my sort of first kind of intro classes to medicine. And that meant, that organic chemistry class that you take right in the beginning. But kind of due to some weird scheduling conflict, I couldn't actually get into the chemistry class, and so I decided to take an economics class instead, and I kind of never looked back. So I guess mom was right on that one. Yeah,
So it's a mom and then a scheduling conflict, which really got you into finance.
yeah, that's right. Yeah, what are the chances, right?
It's
Yeah.
a great caption for the podcast. Okay, cool. Well, then you went and did investment banking, and a lot of the folks who are watching this video would probably be in IB, consulting, accounting, or some sort of version. So, tell us why you already sort of knew what you wanted to go outside of investment banking. A lot of folks, including myself, when we started in IB, we didn't really know what was coming next. There's PE sometimes, there's growth equity, but you and I were chatting earlier. You almost knew what you wanted. So why don't you talk a little bit about that?
Yeah, it's interesting. I think I was sort of lucky in that I developed this sort of exposure to entrepreneurship a little bit earlier in my career, and so it kind of set me up in a way where I knew I wanted to get back into that. So actually, when I was in college, after my sophomore year, I was able to get an internship at a kind of a unique company in that it was a venture capital incubator for startups, and it itself was a startup, or was starting up this venture capital arm. And so I was working in a startup that was incubating other startups. And the focus was sort of perfect for like a nerd like me. It was focused on incubating the next big video game studio. And so I kind of had this opportunity to kind of sit right in the thick of things with these game studios, help them think through kind of their financial analysis, their sort of operating model, think through pricing, help them do competitive intelligence, which really meant just playing video games all the time. And so it was just this like perfect fit for me, and it was really exciting. But what it also sort of exposed for me is that in these environments where it's kind of fast moving, it's an ambiguous environment, there's not a whole lot of kind of teaching that's done. I'm not learning from someone necessarily. I need to pick it up on my own, and I didn't really have that kind of fundamental sort of foundational technical finance experience. And so my thought was, let me go into a more kind of classic or fundamental kind of financial analysis type organization. Let me learn what I need to learn and then get back into this space that I like. So it was unique in a way. And, I think was kind of like a North Star guiding force for when, I joined JP Morgan, after college. I knew sort of what I wanted to get out of it and where I wanted to go next. And that sort of opportunity came about later when I was able to jump to startups relatively early in my investment banking career.
Awesome. Sweet. Yeah. You're definitely probably a leg up on most of the analysts and associates who knew you kind of knew what you wanted. So that's great. Let's kind of jump into strategic finance. What you have experienced both at Sift and at Chime. But let's kind of like start with, in 30 seconds, how would you describe to somebody what strategic finance is?
Yeah, it's a good question. And I was thinking about this a bit more. And I had asked myself this. I've asked myself this a lot. I'm sure you have as well, because the function gets confused or grouped with many others. I wrote this blog post about kind of what I call the sort of unofficial guide to understanding finance functions. Maybe I'll just kind of borrow from that a little bit. But when I think about what strategic finance is at its core, I always think about it as, this ability to quantify trade-offs and to sort of help teams understand sort of the unit economics or the return on investment of the marginal dollar that we can invest in the business. And that can kind of manifest itself in a couple of different ways. When I was at Chime, what that meant was building this kind of unified unit economic analysis that we used to really justify every product and feature launch that we would do as a business, and making that accessible to not just the finance folks, but the product folks, the risk people, and our various other stakeholders. At Unit, when I thought about kind of the strategic finance involvement, what that meant was, let's build the deal finance model that would justify kind of our commercial negotiation. So let's make sure that we're negotiating these big commercial deals in ways that are not just sort of the best for the client, but also unit economically favorable for you. That makes sense for the business.
Right.
And then at HRT, what strategic finance meant was even a little bit different in that we are a trading firm, and we needed to think about not just our highest performing trading strategies, but the ones that are also the most efficient in their use of capital. And so our metric became return on capital. How do we think about the sort of highest efficiency trading strategies?
Okay, cool. Yeah, I actually love that definition. Being able to quantify trade-offs and business decisions. We've seen different definitions of it over time. I actually like that one. I'm definitely going to use it. How would you, just digging a little bit deeper? FP&A has been around. It's evolving. It's changing. Even when I joined Tala, we were more of a sort of like FP&A style. We've become now truly a very strategic finance function. But FP&A obviously has to be part of that. But one question we get is, do folks from FP&A move to strategic finance? Is there an overlap? What have you seen? And maybe you can speak to a little bit either at Chime or even at HRT. And essentially, how does FP&A in your mind fit with strategic finance?
Yeah, that's a good question. I think that FP&A and strategic finance, for one thing, I'd say that they are very much complementary and sort of complementary functions, and that they share some overlap, and they can share some overlap, but they often work really well kind of paired together in a distinct way. When I think about strategic finance, it's what I described as kind of quantifying trade-offs. It's investing that marginal dollar. The kind of initiatives that you might work on sometimes tend to be these more greenfield sort of 0 to 1 initiatives. You're designing the business model for a product or initiative that's being launched for the first time. Whereas the FP&A team uh, is responsible for really systematizing that initial business model into something that can become reportable, systematizable, process oriented, and incorporated into kind of a larger forecast. And so really they need to go, these kind of functions go hand in hand. Often you'll find, like when I was at Chime, my experience was that really my role started as kind of more pure FP&A. We really needed to do the blocking and tackling of sort of building up the accounting function, handling month-end close, designing the operating model, helping to understand how we push the business forward. And then the role expanded to include both this kind of ongoing reporting, operating model, near-term and long-term planning of FP&A alongside a strategic finance function or mandate that was focusing on launching new initiatives. So when we were thinking, how do we launch this free overdraft product, something that is extending credit to our members with an uncertainty around their payback, their ability to sort of return funds, and something that we're not going to charge money for. How do we make this work? That's where we really relied on strategic finance to say, actually, we could maybe think about this extension of cash as sort of a acquisition cost. And it's an interesting one in that when I give you $25, you're going to pay me back 97% or 97% of the time, you're going to pay me back that $25. And my cost is really just that 3%. And I can pair that against this amazing growth lever. So our strategic finance team really helped with that. The FP&A team says, okay, now that I know how this works on this unit level, how do I incorporate these loss rates and this growth rate into my financial model? How do I make sure that this is going to be incorporated into our board plans? How do I represent this to the board? I find them to be both uniquely important. And I sometimes, I don't know if this has happened to you, Zoo, but I don't love that one's called financial planning and analysis and one's called strategic finance because they're both strategic.
Right.
It's just sort of strategic in different ways.
Yeah. No, I think you summarized it pretty well. It sounds like from what you've seen is FP&A comes in and is almost like the first. I mean, and we all have to do it. You did it. I did it at Element. I did it at here at Tala. It's like almost like the foundations. It's like we're almost like building like the platform and the processes that then allow us to like do all this really cool shit on top of it.
That's exactly right.
I like how you summarize it. Really quick question on, again, fintech nerd here. So on the Chime with the overdraft, were you actually able to classify that as marketing costs? Like, how is that with the accounting team?
That is a good question. We were not. We actually, for us,
you don't answer. It's also fine.
no, it's a good question. I don't think we didn't actually classify it as marketing, but that's how we thought about it.
Okay.
It was sort of but it was also not, I think, technically like an extension of credit. It was more like a purchase volume spend kind of classification. Yeah.
Okay, cool.
Yeah, but definitely an interesting element there. Yeah, and there was certainly the accounting side came into it.
We've gone through some thinking around that here at Tala because obviously our market is the underserved folks. So I know our loans are relatively small. They're also outside of the U.S. and we're always trying to figure out like how can we do more for the underserved people while we're a for-profit business. We mentioned maximize shareholders. So there's some strategies we've gone through where it's like, hey, should we extend loans to folks who we're almost certain at this moment in time based on our data like they won't be able to do well. But can we acquire them? Can we then maybe educate them and stuff like that? So we've gone through some interesting like accounting principles on how we classify that. But
yeah, and hey, look, I don't think you would be in the minority if you were able to figure that out. My understanding, and we should this part maybe, and we'll figure out if Cash App allows it. But my understanding is that Cash App has often recorded some forms of expenditure that result in loss as marketing spend. That was actually like their little, like you'll see it in their 10Qs or something.
Yeah. Okay, cool. let's shift gears a little bit into like thinking through like some of the folks who are watching this and potential students and candidates. What are some tips you have for folks who are currently banking, consulting, accounting, or some quantitative field? What are some tips you have for them if they want to start breaking into strategic finance? Like they've probably got a good idea now of what it feels like from this podcast, but what are some tips you may have for them? Literally from tomorrow, what can they start doing, and how can they go and land that role?
Yeah, it's a good question. And yeah, and like when I think about like the candidates that have really succeeded when I've hired really high quality strategic finance folks, they often will have some sort of experience in sort of banking or consulting. They have sort of built up that like technical finance skill set, or they are getting it from a program like the academy where they're building up that kind of core technical finance experience. But I think what's something that at least I found to be sort of uniquely powerful, like the best quality candidates that I've seen, they're not necessarily the ones that have the most complex kind of quantitative mind. They're not doing the most complex LBOs or the most confusing sort of financial analysis. The ones that really succeed are the ones that understand um, the kind of underlying financial analysis or the business well enough that they can simplify it and make it into either a unit economic framework or a financial analysis that your product manager can understand or your marketing business partner can understand. They are able to sort of decipher what the levers are, the drivers that kind of help you think through what the LTV could be or what the CAC is or the payback periods are. Those are the ones that I think really succeed. And I think some of my best hires were the ones not necessarily that are coming from the most esteemed business school or the Goldman Sachses of the world, but rather the ones that like have really understood what it's like to work with a cross-functional business partner and understand how they operate and then build a model or a financial analysis that helps them quantify the trade-offs and figure out like what is the ROI.
Yeah, I feel like that's a beautiful pitch for our academy.
Yeah.
No, that makes a lot of sense. I mean, yeah, I just touching on a couple of things there. The students who come through our academy, one of the first things we have is a quick refresher on a three-statement model. So we have a bunch of these pop-ups on the video that says, "We're not teaching you how to be an investment banker. This is
Yeah.
not what."
Yeah.
And some of the students that we get, 3, 4, 6 years of experience, they'll come out to us and they'll say, "Man, like I'm so good at modeling. I've built this most complex models." I was like, "Cool, that's going to help you, but that's not the whole job. You have to
Yeah.
start thinking like an operator. How do you think more cross functionally?" Which is also why you and I spoke about this earlier. Like we are bringing in this marketing concept into
Yeah.
our program. We've already brought in SQL. We're going to bring in some more tangible cross functional learnings so that our candidates can get used to the idea. Because I mean, biased, but I love strategic finance. I think it's the coolest role out there. It's super cross functional. Uh, you've probably heard me say it on the YouTube videos, but I think it's like a path to CEO equally as
Yeah.
much as CFO.
Yeah.
And yeah, like exactly to what you said. Some of the strong candidates, there's a base amount of modeling that you need, but it's not the key.
Yeah, I think that's right. I love what you said there. That whole like idea of thinking like an operator. I feel like that's something that you get to build up with strategic finance, and because it's so cross functional, you get that exposure. And then you're sort of just as well set up to be a CFO who really understands the business as you are to be a general manager of a business unit or to be a CEO. You can kind of speak well and convey your thoughts and then the financial analysis that backs it to a variety of different folks. Yeah.
Yep. Okay, we're almost at time. Let's do a couple more quick questions, and then the last one we'll talk about HRT a little bit. But
Cool.
one question: what's one thing you don't like about strategic finance?
Okay, this one's I was thinking about this one a little bit, and I feel like maybe you can attest to this too because
Yeah.
it's a strategic finance experience, but actually what I found specifically is this experience at fintechs. It's a little bit of a blessing and a curse. What I love about being in fintech and being in finance at fintech is you're surrounded by people that are working on financial products, and so they understand sort of the basics of financial analysis. When you're interacting with them, a lot of things kind of go. You're able to like move a little bit more quickly because they understand finance. The downside, and what I don't like, is they also think they know finance, and so you're sort of in a situation where you'll have product managers questioning how your model works. You'll have CEOs saying, "Why do we need so many finance folks?" Yet, so you have under-resourced finance teams in fintechs, which just seems like an oxymoron, and you have just a little bit more of this churn where you have to like work a lot harder to do the same thing because everyone sort of thinks they know what you're doing. I will say it does also give you this like unique satisfaction where you can be like, I have justified a function among a group of people who all think that they can do what I can do.
Yeah, no, that's very true. I think we've all seen that. Definitely more at a fintech for sure.
Yeah,
um, uh, yeah, and we know here at Tala, we've done for onboarding, we do like FinTech 101, and then we also do like our Strat Fin Function 101. Like, how do we help folks? And then it's also up to like the leaders like ourselves to like go build the relationships with other leaders, and how do we work cross functionally? But yeah, okay. Last question. Why don't you tell us a little bit about HRT? And I know you're leaving, but I think it's a very unique business model. So why don't you say a little bit about it and what you really sort of like accomplished there?
Yeah. So yeah, HRT Hudson River Trading is certainly a unique firm. It's definitely the most unique firm I've worked at. We are in name. We are a trading firm. We use algorithmic trading strategies to make markets more efficient. We do that in a number of different ways. We have a number of different strategies that we deploy on the markets. But I think what's sort of epitomizes how we operate is that we are trading a significant number of securities across a significant number of markets at relatively significant speed. And the only way that you can do that, the number of kind of public numbers we've shared is that we are trading more than 10% of the U.S. equities market volume every day. The only way you can do that is with like high caliber algorithmic trading models. So we're using coding and programming to develop this. And so the culture of HRT is much more of a tech firm than it is of a financial services organization. There are, the vast majority of people are engineers. Our leadership team, you might be used to working for one CEO who's often a business CEO. At HRT, there are 3 partners and they're all engineers. And so it's a very technical place. And it's also a unique place in that we don't have investors. We're sort of all kind of partner capital funded. We don't have customers. We operate in this broad exchange. We don't have specific customers. We don't have products, not in the typical way. We have some product managers, but they're most often focused on internal tools, things that help the traders more so than something that's developed for a customer. And so it kind of sets up this very unique kind of working environment where everyone is just focused on what we can do to make the firm better, and what that can do to sort of improve market efficiency.
Okay.
And so where I operate in this space, and sort of what I was bringing to the role, I think, was actually leveraging this kind of strategic finance functional knowledge from my time at startups and then applying it to this very different industry and sort of different stage of company. HRT has been around for 20 years, still a relatively small firm, just around 1,000 employees, but like really, has built the business, knows what they're doing, and now is sort of just optimizing. My scope sort of encompassed kind of corporate development, and corporate strategy. So I handled competitive intelligence. We also looked at M&A transactions, sort of opportunistic bolt-on acquisitions. It encompassed our strategic negotiations with like key strategic partnerships. In this case, most often with our data center and compute capacity partners. So kind of expand, just like everyone is following that AI race. Well, HRT's been doing that for 20 years. And, we're very much a part of that kind of expansion in data center capacity. And then the final piece was, more what you and I would call strategic finance. So that's everything from kind of understanding the ROI, or in this case, return on capital for our trading strategies, to thinking about kind of long-term forecasting and like underlying forecasting drivers, and then other kind of strategic initiatives.
Awesome. Sweet. I want to do some more reading on HRT. It sounds a really interesting business. I didn't realize you guys did that much volume. That's insane.
Yeah. It's the one thing I'd tell you, just because you've said that, and for all the readers, is the book you'll probably want to go to is Michael Lewis's Flash Boys.
My point. Yeah.
I like Michael Lewis generally, but in this case, I don't think he nailed it with Flash Boys. He didn't interview a single high frequency trader for the book, and he's a little bit biased because he's kind of an old school trader. But there's a guy who I'll find his name, but his book is called it's basically called Not So Fast, and tries to be a relatively objective critique of Flash Boys, and also explains like really what high frequency trading is all about. And it's really, really well done, really well written, like a very easy primer.
Okay. Sweet. Samir, thank you very, very much. This was super insightful. We had a blast. Thank you for making time. We really, really appreciate it. And we'd love to stay connected. I'm sure we will. But again, thank you so much for your time.
Awesome. Yeah. Thank you so much for having me on.